Great to be back with Sherman Wealth Weekly Wisdom, joined by Ashley Perlmutter. Going to answer 3 questions that were submitted and things that we've been thinking about and talking about with clients over the last few weeks. Wanted to share some of these tips with you. Ash, what are the top 3 things that you find that people need to improve on from a financial standpoint?
Yeah, we've been working with lots of clients, prospects, individuals, young couples, and the biggest thing that we tend to see right off the bat is a lack of consolidation, whether that's bank accounts, old 401ks, IRAs. It's very likely to switch jobs when you're young till you're kind of starting a family and kind of forget those old, whether it's IRAs, 401ks, as well as life gets more complicated, opening multiple checkings accounts, savings accounts. And so we see that many people have just too many straggling accounts and it's hard to stay organized. And I think financial organization is such a key part of your financial success. So I would say that is number one. Another thing that we're seeing in this environment is cash management with the Federal Reserve hiking interest rates. Interest rates are at all-time highs. So we're seeing individuals still earning close to 0% in bigger money center banks when they could be earning close in the 4% range at other institutions on their cash. So we think that that's a do not pass go item, especially in this environment. So that's definitely particular to this specific environment that we're in right now. But that is another big thing that we are seeing with clients, just not taking advantage of that extra interest that they could be earning. And then lastly, another big financial planning item that we work on with clients is goal setting. So as it relates to their short and long-term goals, finding a happy medium. Brad, you always like to say that just finances overall is an art, not a science, a little bit of both. So I think, especially as it relates to goals and finding a strategy that works for you, you need to sit down and kind of prioritize your different goals. So saving cash in buckets for upcoming purchases, but also prioritizing retirement and kind of finding a happy medium that fits in your budget. So I would say those are the biggest 3 things that we've been working on recently with financial planning clients. Anything else you have to add?
Yeah, I think that those are excellent points. I think you're always talking about a lot of people that are starting to get engaged and married. And as you know from the dealings that we have with clients that we are working with young professionals and those just starting their family, as you mentioned. So we're seeing consolidation across when you get married, whether that you've had separate checking or savings accounts or some strategy that may have worked for you when you were single. Of course, having that conversation with your spouse or significant other, talking about consolidation of these bank accounts in addition to potentially old 401ks and other jobs that you might have had is really important. Another thing that I think folks don't realize is that if you have direct deposits or something going into your checking account or like to write bill pay or checks from these accounts, not talking about disrupting that piece of your finance, just adding another layer of savings. So using that initial checking account to push dollars off potentially to those higher yield savings. So not uprooting your entire process. So just earning some extra money on that savings that you had. So excellent points there and well said. Thank you.
Switching it back over to you, one question that I had was, can you talk a little bit about interest rate policy, where interest rates are right now, maybe some do's and don'ts for the consumer in this environment?
Sure. I thought you were tackling interest rates, but I will hop on that. No problem. Yeah, so we have next week a Federal Reserve meeting for the first time in quite a while. The market is unsure about what the Federal Reserve will do. As you know, they've hiked 10 consecutive times to this target rate that they were trying to get to. We've seen inflation numbers kind of cool. Folks are worried about a recession. We just had the debt ceiling kind of hang over our head and the banking crisis. So lots of digestion to do from the economy from the series of hikes that have already taken place. So the Federal Reserve is at a interesting spot. Last time we checked kind of the Fed futures of a hike, we're in the 20-ish% range, as high as 56% kind of 2 weeks ago. So really interesting. We'll follow along. Hopefully the market is anticipating a pause and wait and see approach from the Federal Reserve. You had lots of Fed speakers come out over the last few weeks, putting their 2 cents in as to what to do next. So we will have a follow-up there for you on what they do. Will they be done hiking and then cut rates towards the back half of the year, early 2024? That is to be determined as well. Or will they need to continue to hike in July and further meetings based on economic data that we have? So we don't know. Right now is kind of an interesting answer for all of the rate policy that we've had over the last 18 months. But what we do know is that home equity lines of credit are now more expensive than they were 2 years ago. Credit card debt rates are more expensive than they were, of course, 2 years ago, and continuously higher. You've already touched on savings accounts being at rates that are at generational highs, haven't seen since the 70s. And then we have student loan debt coming back online based on the debt ceiling bill. So lots of opportunities to evaluate. You talked a lot about setting goals. Folks should be earning, rate of return on cash, even if it's for just pure emergencies or if it's for saving for something in the fall. Student loans are a big item that we're seeing. A lot of folks have been traditionally paying down mortgages or making an extra payment every so often. That's something that you'd want to evaluate personally, depending on the rate of your mortgage, of course, and your tax rate, and then the rate that you could earn on savings. So lots to look at from an interest rate perspective. And as you said, in the environment that we're in, really good to get a handle on the rate that you're paying on debt, if you have any, and of course, the rate that you're earning on savings in excess of just a regular checking account. So we're seeing credit card rates and balances at generational highs. So lots to help folks with there. And I think it comes down to something that you always harp on, which is the budget itself and just this wants versus needs and understanding just at the basic level what's coming in every month from paychecks and then what's going out as it relates to fixed cost and variable costs. So most folks, as we know, don't have a handle on what that is. And I think that it all starts there.
Yeah, those are great points. I think, like you said, it's really important. It all comes back to the budget, especially in this inflationary period where people are adjusting to maybe a higher cost of living. Their budget isn't the same as what has been working for the last few years, given that the economy is ever changing. And we've been seeing lots of changes from interest rates to and just inflation overall, prices of everything over the last year. And so I think the last question that we wanted to touch on was just some, before we wrap up the video, for anyone watching, just some do not pass go items they can implement into their financial plan before the summer kind of is over.
Yeah, great thoughts. And I know, everything is really individualized. As you said, a lot has to do with your goals, but some of the things that we have been looking at, especially now that most folks have filed their tax return, if you're still on extension, of course, extenuating circumstances or small business owner, something like that, more than understand. But One of the top things is that if your employer offers a 401k, understand what the match is. We're seeing lots of folks not contributing up to the match rather, and losing out on those dollars. So take a look at your benefits guide. I know enrollment season is usually in the fall, so reach out to HR to understand what you are eligible for as it relates to workplace benefits, and make sure that you're taking advantage of those. And that also has to do with not only the 401k, but of course, life, health, and potentially disability insurance that might be covered under a group plan. And if you don't have any of those, want to reach out to financial advisor, insurance professional to get that as protection for you and your family. Of course, Roth IRAs are all the buzz. Income limits do apply there, and of course, have been raised for 2023 to $6,500 if you're under 50. And then, of course, there's that catch-up contribution for those 50 and over. If you are subject to some extreme income limits, a lot of 401ks are now having a Roth feature. So let us or your CPA or a professional analyze your tax return to see and run analytics on what might be better for you from a pre or post-tax contribution. Of course, 529s with kids either graduating out of school or the school year ending this week or next. 529 plans are a great way for parents and grandparents to potentially save for college, or of course that $10,000 K through 12 limit. And then based on the Secure Act 2.0, we know that depending on some of the stipulations, and make sure that you qualify for them, up to $35,000 can be converted to a Roth IRA down the line if your kid or grandchild doesn't use, or any member that you might be opening up a 529 plan for doesn't use all the funds. A way to make sure that those funds are utilized in a tax efficient way. And then I think you touched on at the beginning, for you're still with us watching all the way through, high yield savings or CDs, treasury bills, now that the debt ceiling is kind of behind us for the time being, great way to maximize savings, still having that FDIC insurance behind you, as most people were awoken to that based on Silicon Valley Bank collapsing, what that was. So make sure you're understanding the FDIC insured limits on that cash and or savings. And I think that's where we are. Anything else that we missed before we wrap?
Wow, lots of great tips for everyone listening. I think that's a great place to wrap up. Let us know if you have any questions. I think a big theme about this video is how personalized and individualized financial planning can be. So as Brad said, this is all unique to your financial situation, which is why it's great to have a third party come in and help analyze these different areas for you and your family. So info@shermanwealth.com if you have any questions. If you have any topics you would like for us to cover next time, let us know, and we're happy to talk about it. And we'll talk to you guys soon. Thanks for watching.
Thanks for watching.